This week, the Federal Reserve has made a crucial decision as to the direction that they're going to head in when it comes to monetary policy. And based upon all the evidence we have now, we know that when they cut, that is a sign of quantitative easing that is on the way. Therefore, liquidity will flood the markets. So what does that mean? This instrument right here, the Federal Reserve note, is now one of the most endangered instruments that you have in your possession. Let's talk about it. Okay, so I want to take a quick minute, share with you some thoughts in reference to this past weekend and just getting a chance to look forward into the future as to what could come. And as of right now, with this half a point pivot, it's monumental in reference to how it will impact your personal finances moving forward. Because as we know from previous events, whenever they cut, QE starts, the spigot is turned on, and the world is flooded with currency. But this time we're already oversaturated with currency due to the massive amount of debt the world needs to sustain itself. And so the actual purchasing power of each one of these units here will be threatened because they're going to create trillions. My suspicion, based upon all the things I put together, anywhere from $8 to $10 trillion in this next emergency event that occurs that will literally make your savings, your retirement look this small when you look at the broader picture of how much currency will be in existence at that time. So therefore, safe haven assets will be crucial. And so that is something to really focus on moving forward. And so for those who might be new, my name is Mike. And so my goal is just to put these concepts together, share with you what's happening in the news, try to break it down in a way where you can understand it and hopefully get one step ahead of the mainstream narratives. And so this past week, the U.S. saw its first interest cut since 2019, with more expected as the Federal Reserve scrambles to prevent a looming recession. So while officials might not admit it, the signs suggest that the economy is already in trouble. And so these recent moves are having significant effects on both the Federal Reserve note, commonly known as the dollar, and precious metals like gold and silver. And so I want to just share with you a lot of ideas. But first, I want to start with the Federal Reserve note. And so rate cuts have historically weakened it. And we're seeing that play out once again. And so the U.S. dollar index, which is a measuring tool for a basket of currencies, predominantly the G7 nations for the most part, is definitely telling us some signs right now. And it has been steadily dropping. And this decline is expected to continue. While this is bad news for the Federal Reserve note, it's bullish for gold. And so gold prices have climbed substantially, hitting new nominal highs like we've never witnessed. But however, gold still needs to rise an additional 4.6% to reach its all-time high, adjusted for inflation, which would be about $2,743 or so, set back in 1980. The way things are going right now, we might see this before the end of this year, based upon the current trend. So as gold prices rise, it becomes increasingly unaffordable for many. And so when we compare today's personal income and savings rate with the cost of gold, it's clear gold is less affordable now than it was back in 1971. So when the U.S. left the gold standard, within those years, we saw gold go from $35 an ounce all the way up to close to $1,000. And that was about 50 years ago. So even during the inflation crisis of 1980, Americans could save nearly 2 ounces of gold annually. Today, most can barely afford 1 ounce. And so while gold is getting all the attention, silver has quietly outperformed gold so far this year, rising about 31% compared to gold's 27%. So despite silver sitting around $30 to $31 right now, there's still room for more gains there. And historically, silver tends to trail behind gold by 2 to 14 months. So this means silver hasn't yet fully mirrored gold's divergence from the weakening Federal Reserve note, but it's likely to catch up real soon. So looking forward, $32 an ounce of silver is the key level of resistance. And so if it breaks through and holds that, silver could rise beyond $40 an ounce relatively fast, potentially revisiting the 2011 high. While gold is only about 5% away from its inflation-adjusted peak, silver would need to jump by 118% to match the 2011 high, given current economic environment and things like that. So this is very much something we're paying attention to. There's a strong opportunity here for investors, however. So as gold becomes less affordable, regular investors are likely to turn to silver. So demand for silver jewelry has already increased over the last few years, and industrial demand, especially in renewable energy, is also driving the way as well. So for those that are considering investing right now, starting a routine purchasing schedule rather than waiting for a big dip, as some people recommend, could be a wise strategy right now. So silver may experience short-term pullbacks, $1 or $2 here and there, but long-term trends suggest prices will continue to rise. So buying steadily and only what you can afford can help you take advantage of these gains as both gold and silver becomes less accessible. And so at the end of the day, the affordability of gold and silver is quickly changing the game. And waiting too long could mean missing out on future opportunities. So with the Federal Reserve note expected to weaken further and the long-term bull market for precious metals underway, now is the time to consider getting in before prices climb well beyond your reach. And so in reference to gold, right now to go online, you're going to spend $2,700 to $2,800 for an ounce of gold. And so to me, that is already something that the average person, I would imagine 99.99% of people who are watching this don't have an additional $3,000 sitting around there to go redeem. So it's having 3,000 of these notes here sitting on the sideline that you can then take to your coin shop and redeem these notes, because these notes all along were meant to be redeemable. But not many people have a lot of these just sitting by. So the next thing the person should consider is, what can I do to acquire something that has intrinsic value, long-term storage, use case, as well as something that is somewhat fractional so that it can be used if need be. And the best way to do that, I believe, is with fractional gold. So right here in front of me, I have some gold notes. So these are actually 24 karat notes, 1/1000th of an ounce of gold. This is the most affordable method to get 24 karat golds into your hands as a wealth preservation vehicle. And so these two notes here cost $5 a piece. So this is $10 worth of Federal Reserve notes value in my hand. But in the long run, these two notes here could definitely preserve and protect your wealth that was put into these notes, depending upon the time that you actually got into these notes here. So these are gold backed notes here, and I want to make sure that I provide as many options for people to be able to protect, preserve, and to hopefully prosper in this transition we're in now. So if you guys have interest in getting a hold of these notes, I've partnered with the manufacturer of the notes to try to get them into people's hands so that everyone has a chance to actually get something real and tangible that you can actually own in your possession. So if you're interested, the link's in the description. Go to buygoldnotes.com. You can go directly to the source and see the variety of options they have there. But once again, the best way, in my opinion, to dollar cost average into these units here, this is a $5 investment. But then again, it's $5 if it go into savings that could sit on the sideline and protect you against the diminishing of these things right here. So once again, just present options to you. This is not financial advice. This is just monetary awareness, as I like to call it. And it's just me giving you a glimpse as to what is occurring based upon previous events and what we could possibly expect in the days ahead. And one thing is for sure, this thing right here will not appreciate in value, because that is deflationary. And deflation is like kryptonite to the banking sector. It causes more harm than good, and they don't want that. So they're going to print a lot more of these before they let the system collapse. And therefore, you need to protect yourself. So once again, 24 karat gold notes available to everybody to protect themselves as a starting point. It's not the end of be all, but then again, it's somewhere to be as a way to protect yourself. And so once again, I just want to share some thoughts real quick. Get your thoughts on this. If you find value here, hit that thumbs up button, share a comment down below, and feel free to ask questions, and I'll check through the comments and share my thoughts and ideas according to what I understand. But other than that, just want to connect with you. Hope you found value here, and subscribe, and I'll catch you guys later. Peace.